The US economy is the biggest in the world. As the saying goes, when America sneezes, the rest of the world catches a cold. But in 2009, the symptoms pointed to a far more serious condition, and it was left to US President Barack Obama to come up with the right medicine to steer the economy out of its worst recession since the 1920s. Here on Wall Street, the banks have been widely cast as the bad guys, blamed for fueling the financial crisis, crying for help under the threat of bankruptcy, receiving a government bailout, and now back to making healthy profits and handing out multi-billion-dollar bonuses to bank executives. But for Main Street and much of the world, the recession is not over yet, and 2010 may not bring much relief. 1 year ago, the US economy was in free fall. The talk back then was not just of a recession, but of a potential depression. The first response of a new president, signing into law a nearly $800 billion stimulus package, a massive injection of cash that Obama declared would jumpstart the economy, create millions of jobs and lay the foundation for recovery. In the months that followed, as bank balance sheets stabilised, unemployment rates, home foreclosures and personal debt continued to climb. And while the crisis was kept from becoming a catastrophe, there are still precious few signs of recovery as the US enters a new decade.
We had to come here and face the doors locked on our faces.
The US unemployment rate hit double digits in October and still lingers around 10%. Many analysts predict jobless numbers will remain high for some time to come.
I also fully expect unemployment to stay above 8.5% on average for the entirety of 2010. I just don't see any large growth areas in the US economy big enough to take up the slack in the labor markets.
Public anger directed at the banks is likely to continue in 2010. Several corporations which were bailed out by the government have repaid the money with interest, but Washington has lost its bargaining chip with Wall Street because the banks no longer need help. Despite plenty of tough talk, President Obama and the US Congress have been criticised for not tightening financial regulations to control the sort of high-risk lending practices which triggered the financial crisis.
Unless I thought it was going to $6.
The US dollar is ending the year on an upswing, but fell far in 2009, at one point spawning talk of oil being traded in euros instead. But predictions of the demise of the once invincible greenback may be premature.
There are only so many games in town as big and as liquid as the dollar, and so as much as people are unhappy with many elements of US policy and the US government and the dollar, there's only so many places they can run and only so much running they can do.
At some stage, the US economy will bounce back, but there are fears poorer countries whose banks or governments aren't rich enough to prop up their economies could experience a double-dip recession if they don't manage their recovery properly.
If you wait too long, you increase the debt, and that's not good. But if you exit too early to take a bigger risk, the risk is that you may go back to a new downturn and global growth, and in this case the consequences may be huge.
As for the United States' economic pains, they may plateau in 2010, but any growth is expected to be modest. A full recovery still a long way off. Cath, Al Jazeera, New York.